You know, I think right now the Fed is looking for a reason not to raise rates as opposed to raising them. I mean, right now the news flow is so thin. We do have two jobs reports, one coming up Friday and one a month from now before that meeting on the 16th. But it does seem like the market is looking for that, and it would be a headwind to think that the zero interest rate policy for perpetuity would be a good thing. It would be an absolute headwind to the market.
Do you think the wages data from last week were something that might have slowed down the enthusiasm about the Fed lifting rates? I mean, there is really very little inflation in the US at the moment.
Yeah, and I think it did, and they're definitely taking notice, but I think the jobs picture overall, looking at the granular details, means a lot more than one data point, and I think they're just looking at the flow of things. But you're correct. That number wasn't very encouraging, but on the whole, not narrative shifting enough to cause them to not raise rates.
Larry, in anticipation of the Fed's decision in September, how do you expect over the coming month?
You know, I think right now, between now and then, we have so many numbers coming out, and I think it's just, the market is just looking for a new narrative shift. And between now and then, I think the S&P is completely stuck in the mud, the equity market in general. I mean, obviously, if we have more of a commodities route that we've seen, that could change things. But between now and then, it seems like status quo, and it's going to be a long time until the middle of September.
As you say, I guess markets really at the moment can't seem to pick up that momentum in either direction. Interestingly, though, sentiment has actually never been more negative. So how can this discrepancy be explained?
You know, it's a great question. I mean, sentiment this year has been absolutely horrible. And I think that's one of the reasons the market continues to at least stay where it is and not make a big retracement. It seems like so many people are just giving in to the market, don't like the market whatsoever, the fundamentals or what's going on around the world, looking for any reason to sell it. And I think that's a perfect reason why it continues to trade as high as it is.
If we were to see, say, liftoff in September, do you think that would be perhaps a positive for stocks, and that might actually allow the S&P 500 to finally break out from its months-long range?
You know, if that's the only issue, then yes, absolutely. I mean, I think the opposite would be a vast headwind. I do believe the market's looking for that symbolic rate hike, and they're looking at that as being an all clear, as you mentioned earlier. It's been 9 years since anybody's uttered that word. So to start that tightening process, even if it only goes up to 50 basis points by the middle of next year, that's going to do sentiment a whole world of good, just knowing that maybe we're not in the clear. We haven't achieved escape velocity, but we're going in the right direction.
Larry, of course, we know the Fed very much in focus, but of course, with earnings winding down, the summer doldrums, soon going to be upon those US markets. With that in mind, what are some of the bigger macro events to keep an eye on over the coming weeks?
Well, we have the jobs picture coming up this Friday. I mean, unless the unemployment rate comes out much higher than 5.5 and the ads are worse than 185,000, that would be status quo. And then we have China industrial production, retail sales numbers coming out, very important. The Fed minutes come out next week, and then we have the global PMI numbers, not to mention another jobs report at the end of the month. So a lot to look forward to, but I think a lot of it's going to be sifted through with a fine-tooth and comb, looking for a reason for the market to move.
And a lot sifted through, as you say, coming from China. I mean, we're continuing to see that weakness, particularly, in the non-energy commodity prices, of course, oil prices as well. It does seem like at the moment, though, there are a lot of conclusions being drawn about, Chinese growth being slower than a lot of those official estimates.
Yeah, and there's a lot of narrative on China, and most of it's just misunderstood by the public. I mean, the bottom line is, when it came to the stock market route, I mean, we see that it was this margin debt financing that was a major cause of this market. But when it comes to growth, sure, I mean, it is slowing. We've seen that for a very long time, but they're reorienting themselves from a industrial production society to a consumer-oriented society, and it's going to take a long time for that to sift out.
Speaking of those oil prices and, commodities, certainly under pressure after last week's inventory report showed a decline in both crude stocks and US crude production last week. Do you expect that sentiment to remain bearish on those crude markets?
You know, right now I do, because we've come back to realize that we're still well oversupplied. And I know the growth, the demand story is a little bit better as well at 1.2 million barrels a day. We have OPEC producing 2 million barrels a day over their quota. And we have to realize that the U.S. market won't balance the global market by itself. So we're back to looking at the micro, realizing that we're oversupplied.